Happy Thursday out there, Team 42. It's your skipper here, Darius Dell, to present our macro minute for Thursday, October 24th, 2024. As always, we'll start with the executive summary from today's leadoff morning note. If you would like to review the analysis supporting these conclusions, as well as what specific changes you need to make in your portfolio to remain on the right side of market risk, you need to be a client of 42 Macro. So today's key macro questions are, will big tech earnings power the stock market past the election? And will the UK budget roil global sovereign debt markets? Our answers are, Tesla is up 15% today after beating consensus expectations for earnings and delivering robust guidance for sales next year. Alphabet, Amazon, and Meta report next week. Blowout results from these tech giants will help stocks overcome the current post-OPEX window of weakness they are currently mired in. Next week, UK Chancellor Rachel Reeves will unveil Prime Minister Keir Starmer's first budget, and sources familiar with the matter believe it will contain a meaningful increase in borrowing, enough to cause UK gilt bond yields to positively diverge from global rates this morning. Recall that in September 2022, UK Prime Minister Liz Truss' bloated budget announcement triggered a VAR shock in the UK gilt market that rippled across global rates markets. The Bank of England had to interrupt its rate hiking program with QE and emergency lending to preserve financial stability. That is an underappreciated risk to global rates markets amid rising US fiscal sustainability concerns. Transitioning to our 42 macro dashboard here. As always, wrapping up with a question from our community. This one is actually from me. It's not a question. It's just a comment. I thought we have some commentary from Mike Wilson, who's the CIO and chief global equity strategist over at Morgan Stanley, multiple time institutional investor, ranked #1 macro strategist on Global Wall Street, someone I have a tremendous amount of respect for as a competitor in this business. He said something that really resonates with me and hits home and really coincides with a lot of the sort of teaching that we try to espouse to our clients and community here at 42 Macro. So let me just shut up and read the quote. It says, and I mean, look, sometimes we get it right, sometimes we get it wrong. And I would say we had a stretch where it felt like we got everything right. And of course, that never lasts. The good news about investing is you can always change your mind, which we've done. And we've, raised our targets and we've changed our strategy to deal with what the market is giving us. And that's really the game, is just to take what the market gives you. Don't fight what the market is telling you. The best analysts in the world is what the market internals are saying. We'll use it as part of our process, actually. And I think it's the best way. And I think the best way is to just be humble about it. So don't be afraid to say, hey, we're wrong. I think some people are expected to be right all the time and nobody is. And being wrong is not a sin. It's staying on the wrong side of things for too long that is the problem. So this is one of the world's most respected macro strategists in the world, certainly, in my opinion, one of the top investors in the world. This guy has taught a lot of people about institutional risk management across the global buy side throughout his decades-long career on Global Wall Street, as, again, one of the top ranked strategists in the world and the CIO of Morgan Stanley. So I say this all the time. A lot of what we've built here at 42 Macro, it's not out of thin air. It's the culmination of 15 plus years of flying around the world, meeting with some of the world's top institutional investors and going, wow, that's really smart. Wow, that's really smart. Oh, wow, the way I used to think about that is really dumb. This is actually smarter. Ooh, the way I thought about that was actually dumb. This is smarter. This is how the smart people are thinking. I've been a sponge, and the wringing out of that sponge is dripping knowledge onto our client base and our community here at 42 Macro. And I'm really grateful for that. This is a perfect microcosm of what we say every morning in these macro minutes. If you want to stay on the right side of market risk, you need to be a client of 42 Macro. You don't have to stay on the right side of market risk. You can ignore market risk and just maintain your legacy thesis and your legacy positions associated with that thesis and lose a bunch of money because you're being dogmatic about your views. That's what a lot of people are doing. In fact, that's probably what most people are doing. Most people do not have the emotional humility to respect the evolution of the market regime like we do here for our clients at 42 Macro. So I will wrap it up there. Darius, and by the way, that was Mike Wilson on Bloomberg. I want to say Monday or Tuesday if you want to go check out that interview. So we'll wrap it up there. Darius Dell here presenting our macro minute for Thursday, October 24th, 2024. Everyone have a wonderful day out there. Best of luck. We will catch you back here on Monday. I'm going to be offline for the rest of the day and tomorrow. Got my family visiting from Seattle. So we'll wrap it up there. Everyone have a great weekend. We'll catch you back here on Monday. Cheers.